Welcome to Money Talks with Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, a mixed U.S. retail sales report tempers recession fears. The Fed is likely to stay on hold this week. What will it mean for the Philippine markets? We speak with HSBC from Hong Kong. Philippine shares and the peso stay relatively strong in a volatile global environment. We dive into the data. And Ballet Manila celebrates 15 years.
Well, we decided to put up our own company, Ballet Manila. It was a leap of faith. It was definitely a gamble, and it just, paid off.
An excerpt of my conversation with Ballet Manila Artistic Director and CEO Lisa Makuha Elizalde. The decision of the Federal Reserve will offer the most tangible evidence yet of how U.S. central bankers view the impact of President Trump's economic policies. Forecasters changing their expectations for growth this year. This comes as Trump declines to rule out a recession, given the inflationary risks brought about by his tariff orders. On Monday, the Commerce Department reported modest growth in retail sales, rising by 0.2% in February. Economists expected a gain of 0.6%. Revised figures for January showed sales declining by 1.2%. Americans worry about trade uncertainties as consumer sentiment went down in February by 11%, the lowest since November 2022. The figures pose a problem for Fed policymakers since a rise in inflation expectations could indicate interest rates should be kept unchanged much longer. One analyst tells Reuters the Fed Chair Jerome Powell will take a dovish tone in weighing different factors when the board starts to meet on Tuesday, Washington time.
So the Fed is likely to say they're in no hurry to cut interest rates, but I think they're going to take a more of a dovish tone during the press conference, because I believe the Fed Chair Powell will be acknowledging the fact that the retail sales has been weaker, that consumer confidence has come down, and letting people know that the Fed will do what it needs to do when it has to do it.
Take a quick check on the Philippine markets. The PSEI opens today higher by about 0.1% at 6,312. So we're budging above 6,300 still. The stock market climbed yesterday, Monday, to the 6,300 level. Investors are welcoming China's fresh stimulus measures. As for the Philippine peso, let's take a look at how that's traded. The start of the day at 8 a.m. at 57.21 from the previous close of 57.3 pesos per dollar. And let's ask our next guest if he agrees that the markets will continue its upward trend. For more with us, Ron Acoba, the co-founder and chief investment strategist at Trading Edge. Good to have you back on. Ron, thank you so much for joining us. Ron, are you with us?
Yes, Cathy, I can hear you.
Great.
Hello?
Okay, we had to call you back because we need a technical perspective from what's going on. Are things looking up for the Philippine markets, you think, Ron?
Well, in my opinion, I think the PSEI is actually poised to extend its recent rally, given the fact that despite the notable pullback in the U.S. equities markets, our own local market has managed to keep itself not only steady but even put on some gains. So its relative strength suggests that some fund flows could finally be flowing into not only into our region but specifically into our market as well. And looking at individual stocks, for example, the banking sector. The banking sector has performed quite well over the past 2 weeks with the likes of BDO and BPI testing their highs. Imagine that. So I believe with the banking sector leading the way, the local market will indeed be positioned to extend its ongoing rally in the very, very near term.
I wanted to pull up the PSEI here and just show you how the index has traveled. Really bounced back
Yeah.
below the 6,000 level since the start of the year. The index fell to a low of 58.62. That was last January 31st. It's quite a ways to the 7,600 level
Yeah.
that I've heard it might go to. But that was something that we'd seen in October 7 of last year. So what catalyst do you think the PSEI might need for a break above 6,400? You can see there on that chart.
Well, generally, if you recall, over the past 3 or 4 years, the main driver of market direction remains to be the direction of the monetary policy, both in the U.S. and here, right? So far, at least locally, it is expected, or there's a better than 50% chance that the BSP would cut again by at least 25 bips in its next monetary policy next month. So that would be positive. And at least locally, in the past couple of months, local stocks have also benefited with the cut RRR cut that the PSB with the RRR cut that the BSP had recently done. It already cut, I believe, the bank's RRR at twice in the last few months. So this monetary policy loosening, at least by the BSP, is finally starting to show up interest in the market. And
it's
to be
really
specific,
showing up as well in the foreign buying, because when you look at the chart there, it's pretty convincing. They've really been supportive. It's buoying the Philippine stock market as it is the Philippine peso, the local currency strengthened by 1% versus the US dollar since December's fall. And when you look back to that month, it fell to nearly 60. So what do the technicals say about that possible break below 57, where the peso is currently hovering?
Right now, in the last, let's say, in the last 8 or 9 days, the USD PHP exchange rate has just been trading within a tight band at around 57.30. But prior to that, it has already broken below its key support at around 57.70. Now, given that, I actually expect the USD PHP to continue to fall down. In other words, for the peso to continue to strengthen by another 50 cents, perhaps, to around 56 to around 56.7. And this is and the drop in the US dollar index and the US yields actually supports this prognosis with the US dollar in general relative to its other peers, other major currencies. Its decline actually translates to a weakness in the USD and against the peso as well.
All right, we got about a minute. Where do we deploy then, Ron, knowing that the peso might strengthen further, the BSP is going to cut, and that we're seeing a lot of play going on in the big banks?
So far, banks has been the leader in this ongoing rally, albeit a very shallow rally, but nonetheless, like I said, the bigger banks, BDO, BPI, are testing their highs, and we haven't seen the general market rally to its fullest yet. So I believe the banks will lead a notable rally in the general market moving forward. So yeah, I would deploy my funds into banks, particularly the leaders, BDO, BPI.
All right, take your money to the banks. That's the message there. Thank you so much for making the time, Ron. I know you got a technical conference that you're catching up with. Ron Acoba of Trading Edge joining us on the line. And you're watching Money Talks on One News. When we return, the Bangko Sentral warns inflation may exceed its target later this year. And a storyteller on tiptoes. Catch my conversation with Lisa Makuha Elizalde as she talks about 15 years of Ballet Manila. Keep it here on Money Talks on One News.
Simon
Which
headquarters,
floor?
just across Bloomberg.
Yes, I know. That used to be my bank. After the show, I would go there and ano to, withdraw
Yes.
deposit.
What
Saan?
years? Anong years po kayo sa Hong Kong nun?
Ako, nag-Bloomberg ako for ano to, the balance of 9 years. Tokyo, 4 years,
wow.
5 years in Hong
Ma'am,
Kong.
last 15 na lang, sorry.
Welcome back to Money Talks. I'm Cathy Yang. The world is also digesting the effects of Trump's tariff orders, with the Organization for Economic Cooperation and Development, or the OECD, projecting slower global economic growth until 2026. The Paris-based research body reports higher U.S. tariffs are set to slow economic growth and push inflation higher around the world. The OECD expects the global economy to grow by 3.1% in 2025 and 3% in 2026, having been projected to expand by 3.3% in both years. Two countries at the receiving end of Trump's tariffs will see possible ramifications. Mexico's economy is expected to shrink by about 1.25% in 2025 and over half of 1% in 2026. While Canada's economic growth will slow to 0.7% for both years, having been projected to expand by 2%. Only three countries will be spared from a slowing economy: Turkey, Argentina, and China.
In this OECD interim economic outlook, we project global GDP to grow at 3.1% this year and 3% next year, which, compared with our last economic outlook in December, is a downward revision of 0.2 percentage points for this year and 0.3 percentage points. Threat of new tariffs and the associated rise in policy and geopolitical uncertainty impacting on business, investment, and trade.
Let's get you a quick check on the markets. The U.S. markets have extended the rally Monday as they welcomed U.S. retail sales data despite the low-than-expected figures. The Dow is up by nearly 1%, S&P 500 rose by 0.6%, and the Nasdaq climbed by 0.3%. The futures markets pointing to a slight decline there when the markets open tomorrow, Tuesday, New York time. The Dow and the S&P slightly down by 0.1%, and the Nasdaq declines nearly 0.2%. Asian markets are rising this Tuesday morning in the first hours of trading. The Australian ASX 200, an up arrow there, trading higher by 0.6%, and South Korea's Kospi up by about 0.75%, and Japan's Nikkei gaining 1.3%. Besides the U.S. Federal Reserve, Asia is keeping an eye on Japan's central bank. It is expected to set its policy rate on Wednesday. Let's take a look again at the Philippine market, see how the PSEI is holding up. It is indeed above 6,300 in as many days, 63.12 in fact, coming from a close of 63.06 yesterday. Because of China's stimulus measures, the Philippine peso has opened Tuesday stronger, still at 57.21 there, coming from a close of 57.30 to the dollar. With the Fed now likely to stay on hold this week, how will the Bangko Sentral decide in its next meeting on April 10? With us now for more, live in Hong Kong, is Aris Dakanay, an economist for the ASEAN at HSBC. Good to have you with us, Aris. Thank you so much for joining us.
Hello, thank you for having us.
All right, so put yourself in Governor Ellie's shoes for a moment. How much would it matter if the Fed held back from cutting this week?
So if you actually hold back from cutting this week, there are a lot of trade-offs. What are the economic trends that we're seeing today? One, consumption is down. Private consumption, the bulwark of the Philippine economy, is down, growing by around 4.5%. Yes, that may be good in international standards, but if you look at it in the Philippine history, it is the slowest pace of household consumption growth ever since the global financial crisis. So that doesn't really fare well. And the reasons being is high interest rates. You look at the numbers, a lot of these consumers, Filipino consumers, are reeling back on what you call their big ticket purchases. Anything that involves taking out credit, such as, let's say, buying a gadget, buying your next home, buying your next automobiles, all of these are down. And with high interest rates, you could really see it feeding through these slow numbers. So keeping rates on hold has a cost. And the cost may be aggravated by the fact if other ASEAN central banks are actually cutting interest rates. Now, okay, this is quite complicated, so let's take it step by step. If the BSP decides to hold interest rates while others in ASEAN decides to cut, the peso will strengthen. As mentioned a while ago earlier in the news, some people are projecting the peso to reach 56. But if other currencies actually depreciate against the US dollars, what will happen is that foreigners will look at the Philippine peso as expensive as compared to others that are cheap. So
Well,
demand would actually go to Thailand, to Indonesia,
True.
maybe Malaysia, Vietnam.
But
And
Aris, let's
rather
take
than,
it
let's
from
say, for a
the
tourist, let's
point
say
of
a
view
tourist from America or tourist from
of people
UK,
who watch the currency
why would I go
markets.
to the Philippines if it's cheaper for me to instead take my vacation in Thailand?
Okay, now I want to do that, but I want to look at the interest rate differential first. How much of a deciding factor do you think is that differential between the Banco Central's overnight reverse repurchase rate and the Fed's key rate? Because the previous central bank governor, Felipe Medalla, had made a big deal out of the interest rate differential. But what do you think in the current governorship of Eli Remolona?
I think right now fears are there, and I think the Bangko Sentral ng Pilipinas was very clear that it wanted to hedge the risk in terms of FX volatility. While there's uncertainty in trade, at least particularly on what tariffs will actually come up, the BSP decided to stay on hold and see how the markets would play out. Right now we're seeing the tariff risk clearer and clearer and clearer, and you could see here that we are managing. The peso is currently at, again, 57.2. There is space to actually narrow this interest rate differential further, balance your risk in a way that this differential would matter less, and what would matter more is actually supporting growth. And to
Okay,
be
so
able to support growth,
what you're
and to be
saying
able to
then,
support
Aris,
your
is that
exporters.
there's a lot more room for the Banco Central to decide on cutting interest rates.
Yes.
So the question is now, how deep is that cut going to be on April 10th?
So I think it's gonna be a 25 basis point rate cut. All throughout, I do think there's room for 75 basis points. This is under the assumption that the Fed would actually cut by 75 basis points or less. But then again, regardless of whatever the Fed does, I do think there's 75 basis points in the line for the BSP.
Okay, but we got one more data point there to consider, and that's a reason why the central bank moved its meeting from April 3rd to April 10th. It's got that inflation data coming out on April 5th. How much of a deciding factor might this be if indeed we're let loose from the Fed, whatever it does in the next 48 hours?
It's a big factor. The reason why everyone's pricing in a rate cut in the next, and I mean, it's either in April or in June, is the fact that inflation really surprised to the downside at 2.1% last month. And that momentum, or at least sequentially, should bring down the March inflation figure to, again, at a level that would warrant a rate cut. So it's a big deal. It opened the doors and it created more room for the BSP to decouple itself from the Fed.
All right, we got a minute to go. We talked about holidays there. How much stronger will the peso be in the next 3 to 6 months so I could plan out where I go?
We do think the peso can, maybe in the next 3 months or so, it can depreciate to as much as 58, 58.5, or at least to that direction. Mainly because if you cut ahead of the Fed, there is some adjustment, there is some volatility that can enter the market. But yeah, I do think if you keep the peso strong, or at least stronger than your other ASEAN peers, it may be a headwind to your services exports.
Got that. So I got to book that trip now before the peso falls. Thank you so much, Aris. Really appreciate the time. And see you soon in Manila. Aris Takanay of HSBC, live in Hong Kong. The Bangko Sentral ng Pilipinas says inflation may exceed its 2 to 4% target in late 2025. The Bangko Sentral says the base effects from the easing commodity prices in 2024 could push inflation higher this year. Still, it expects inflation to stay within target by 2026 as global prices ease. Forecasts place inflation at 3.5% for 2025 and 2026, though risks like power rates, transport costs, and pork prices could push it up to 3.7%. Despite this, economists see an 83% chance inflation will stay within target until 2027. Slower growth in remittance was recorded in January. Remittances of Filipinos overseas grew by 2.9% in January, reaching nearly $3 billion. That is slower than December and the lowest it's ever been since November 2024. Month on month, remittances dropped by over 13% from the holiday-driven peak of $3.3 billion. Data from the Bangko Sentral show land-based workers sent over $2.3 billion, up by 3.4% from last year, while sea-based workers contributed about $580 million, up nearly 1% from last year. The U.S. remains the top source of remittances, followed by Singapore, Saudi Arabia, and Japan. West Zone water provider Manila plans to list its shares on July 10th. It filed for a 49 billion peso initial public offering with the Securities and Exchange Commission and the Philippine Stock Exchange on Monday, March 17th. Maynilad is offering up to 2.4 billion shares at a maximum price of 20 pesos each. This represents over 30% of the company's total shares. If finalized, this listing could be the country's largest IPO, surpassing Mondanisin in 2021. The offer period runs from June 25 to July 2. Universal Robina Corp's net income fell by 2% to 12.5 billion pesos in 2024 because of weaker profits from its sugar and renewables segment. Sales grew by 3% to nearly 162 million pesos, while operating income fell by 4% to 16 billion pesos. URC's branded consumer foods segment saw a 2% sales increase, while international business grew by 8%. URC President and CEO Erwin Lee says they expect further improvements in the company's growth momentum moving forward. URC shares are now trading up 0.2% from yesterday's close. For more on these stories, check out Business World online. Heads up motorists, fuel prices went down for the third straight week. Oil firms Caltex, Petron, Sea Oil, and Shell announced price cuts. Diesel and kerosene dropped by 20 and 40 centavos per liter respectively, while gas remains unchanged from last week. Clean fuel, Petrogas, and PTT will follow the same adjustments. Industry sources say the price drop follows U.S. President Trump's tariff hikes on Canada, Mexico, and China. Coming up after the break, check out this Albanian flash mob at the Tirana International Airport. Keep it here on Money Talks on One News. to Money Talks. I'm Cathy Yang. As we continue to celebrate Women's Month, we honor women who break barriers and inspire generations. One of them is Ballet Manila Artistic Director and CEO Lisa Makuha Elizalde, a trailblazer and champion for the arts. Here's an excerpt of my exclusive chat with her on Thought Leaders.
That was our press launch where we announced our Pearl Year, the 30th season of Ballet Manila.
You know, I've seen a couple of dances there, but you had us at Nutcracker. Everyone just stopped and just flipped out their phones and started to watch and record. Those were your students from Ballet Manila.
Yes, not my students before they became professional ballet dancers. There are now professional ballet dancers.
Wow, you've seen that
Ballet
whole
Manila.
journey, like 30 years of just training, right from their youth to their professional dancing careers. What's it been like? Because you are the CEO of Ballet Manila, but at the same time, you also head up your own school. So how does that all connect the dots?
Well, I started off as a dancing artistic director. So I would be really focused a lot on my dancing, and then I would delegate classes, rehearsals, mentoring more to my co-director and my guest ballet mistresses, ballet masters, and choreographers. After I retired, when I turned 50, I retired from active dancing, and I concentrated on teaching, choreography, and mentoring the next generations of dancers.
It is indeed the full arch, and it's just so beautiful to see that in 30 years. And you started with a group of 12. My understanding is that you were all very young.
Yes.
Naive was the word you used, kind of, but hopeful
Yes.
and idealistic.
Very much so.
How did those characteristics work together to build what you have from the start when everything was just so uncertain in the environment you were in?
Well, the thing with the beginnings of Ballet Manila is we had very, very humble beginnings. And it was because 12 dancers left the ballet company that we were currently with and formed Ballet Manila. At that point in 1995, my alternatives were go abroad and get a job abroad, and continue my dance career abroad, or put up my own company. And we decided to put up our own company, Ballet Manila. It was a leap of faith. It was definitely a gamble, and it just, paid off. We didn't expect that we would reach 30 years with this kind of success.
That was Lisa Makuha Elizalde of Ballet Manila on Thought Leaders. Only here on One News. Catch the full interview on Thursday. Oh, here's a story of a warm welcome before we go, as in we go and fly. Passengers at the Tirana International Airport were treated to a flash mob of Albanian dancers and drummers. A group of high school students in a vibrant full costume burst into synchronized movement with their feet stomping in unison to the pulse of Simi Trupus, which is a centuries-old dance from Albania's northeastern highlands. Now, this performance comes after the cultural folk dance was accepted onto UNESCO's list of World Heritage last year. I hope no one missed their flight because of that dance. That is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great day ahead.